treating it.
Thank you very much, Scott. Steve, it was an interesting Monday, I will say that. Despite where we are in the market, some things are starting to show up that haven't been showing up lately as far as trade setups. And on the other side of that coin, as you well know from our trading and our other account, things that we're working aren't working so great anymore. And we'll get into more detail about that. So anyway, welcome everybody. Today's April 12th. I'll be your host. Got Steve Gomez in here as well. And before we get going, just a quick thing to make the lawyers sleep a little bit better. Just want to make sure, as far as our disclaimer goes, that everybody here is aware of the fact that we're not giving you investment advice. We're simply showing you some interesting content from a trader's perspective. Simply meaning, if you need investment advice, that's not what we're here for. If you need that, please seek out a licensed individual, somebody like a registered investment advisor or a Series 7 licensed stockbroker that's legally allowed to dispense buy and sell information to you or recommend investments or anything of that nature. I think that'll take care of it. And I always like to take just a little bit of time here at the top of the hour for the newer folks to let everybody know about the community that we've built around the tech that is TI. Barry's Trading Room, or the TI Trading Room, I should say, hosted by Barry Anderson, does a fantastic job. Got a nice crowd in there every day, ladies and gentlemen. Could be 300, 400, 500. I'm sure in our upcoming test drive, it's going to have a lot more than that coming up in May sometime. But it's free. And if you've shopped around on the web for trading rooms, you've probably noticed that most of them that are worth anything, not only are they not free, it's quite a pretty penny is the price of admission there. Whereas here at the TI community, we make it available to you for free. Barry opens up the doors about 30 minutes before each and every open. And you got traders from all skill sets in there, beginner, intermediate, advanced. So it's a great place to hang out. Matter of fact, you don't even need an active TI subscription to get in there and try out the trading room. Other than it being free, the first best thing in there obviously is Barry does a fantastic job at moderating a room of that size, as well as showcasing the way that he trades and the way that he uses TI Pro as well. So get in there if you haven't been taking advantage of that resource. As far as the 5 p.m. Monday through Thursday webinar circuit goes, you get me and Steve on Mondays. Steve's going to take the steering wheel for the trade of the week on Tuesdays, and Andy's going to ride shotgun with him. Wednesday comes along, we like to change it up just a little bit. You get to hear from our CEO and founder, Dan Merkin, along with our Chief Technical Officer, Brad Williams, technically giving you guys a peek at upcoming technical advancements that might be coming down the developmental pipeline as far as TI stuff goes. Then Andy's going to round out the 5 p.m. Eastern webinars on Thursday with the Trading Studio, and I'm going to ride shotgun with him. That wraps up the Monday through Thursday 5 p.m. Eastern webinars. But of course, we have our Monday through Friday daily support session every Monday through Friday, starting at 12 p.m. and allocating an hour for that, 12 p.m. to 1 p.m. Eastern, which you can pop in there and get a live response along with, we're broadcasting this thing live as far as the video format goes. So you can pop in there and get any question answered as, anything that relates to trade ideas, whether it be brokerage plus, simple configurations, just anything is fair game in the daily support webinar. The next slide here is going to show you how to get there. You just notice the bottom left there, trade-ideas.com, which is our homepage. Just put /live. That's going to get you to the YouTube channel where we're doing the broadcasting, and that is a static URL. So once you get there, just bookmark it for easy navigation. In addition to the educational resources that we have at Trade Ideas, this is a really great 4-part video series, especially if you're new. 101, 201, 301, and 401. You can access all of these TI University series, 4-part series, just by navigating to YouTube, finding the Trade Ideas YouTube channel, and just doing a simple search for TI University. That'll get you there nice and easy. So some really good content in these videos for beginners as well as advanced, getting on into the 301 and 401. And here we are at today's agenda. Kind of in the same place that we were at, just kind of popping all-time highs and backing off, smidge of a gap down today. So Steve, if you're ready to take it, now is the time to kind of look at that overall market action. And I'm going to kick the baton over to you, sir. And you should have it.
Yep. All right. So let's stretch this out a little bit. Looking at the S&P 500. First thing that kind of comes to mind is, I think this is probably about, I don't know, 4 or 5% move. We'll call it a 5%. Maybe it's less than that, but nice 4 or 5% move in the S&P, and probably a nice, negative 10% move in my portfolio, maybe more over the course of that time, trying to swing the bat and go along on some of these things. So, before we came on, I was reading another little drop there. Somebody dropped one of Brian Lund's recent articles that talks about, I guess he's been talking to a lot of traders, and he was going over some of the cloud keywords: frustrating, exhausting. It's been a rough first quarter for a lot of traders, and I don't really know too many people who are actually killing it. Whereas, you've moved the clock back 4 or 5 months ago in October, November, things were just going like crazy, and everybody was really hooking onto some good ones. But it's been a tough grind. So that's my big takeaway right now, is that this does not really tell the picture of how hard the last couple of weeks have been. I can't get anything in my portfolio really to go up with any significance. And I know that's kind of the same with the other guys. Now, the other thing that comes to mind here is, okay, so yeah, you're in that mindset. I can't get anything to work here. I got to double up. No, 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 you're not doubling up to do anything. I got to start swinging the bat twice as many. I got to just keep swinging the bat. Well, yeah, but I'm not really going to do that, because I just can't see coming out and trying to establish a new position in an individual stock name after this particular run up. I mean, you're just asking for, this. I mean, we've seen them. They're around the corner at every moment. It seems like in this grind up that we've had over the last year, we've got this big juicy gap. It was just probably itching to be filled on the opening drive down, or some sort of algo stop hunt at some point. So I'm not looking to jump into anything at all. I'm literally just sitting back, and I'm going to back test some things and start seeing what might be working, because I'm still trying to figure out what is working in this rotation, because for the last few weeks it really hasn't. But enough about me, but I do think that kind of rings true with a lot of people out there. S&P 500 leading the way on the rotation, but boy, it's just a bit overbought for my liking. Again, not looking to take any
in the sense that there will be some good longs, there will be some good shorts, but the moves aren't sustained. So you better be nimble when you're thinking about holding things overnight, or maybe it's more of a scalping environment right now. When the good swing trades do show up, the long-term chart's going to tell you about it. Of course, that's no guarantee they're going to work, but at least that's what we have to feel confident swinging in this market environment. So slippery slope, and just as I stated, there were some good longs and good shorts today. And while other things are fading off of the radar that used to be good movers for long-term holds, things that weren't present even a few weeks ago are now making a reappearance. And we'll get into that a little bit later when we talk about some of these opening range breakdowns that have shown up recently that just look very nice from an intraday chart perspective. But before we get into that, just want to go ahead and talk a little bit about Holly. As those of you who attend on the regulars, these webinars, you've probably heard myself and Steve, excuse me, and Andy talk about when the market is in this mode, it makes it a little bit more difficult for the AI to find that statistical alpha because, well, we're in all-time highs. The AI is good at looking at past trends, small trends, down trends, up trends, and then making sense of those from a statistical standpoint. But when we're at all-time highs, it even becomes much harder for that statistical model to do so. So Holly only kicked out 7 signals today, call it a slight down day. 3 things that I typically like to showcase, like the conservative and moderate spread, any trade arounds, and any add-on opportunities. There's just not a lot out there, but there are a few small nuggets here. So let's just go ahead and get into the Holly recap, and we can see those signals that were generated today on the blotter here. And notice the positions, or excuse me, the strategy panel. Pretty good little collection of strategies made the cut today, but of course, over half of them did not fire any trades. Only 1, 2, 3, 4, 5 of the strategies that showed up for today's trading issued any trades. Most of these just kicking out 1 trade, with the exception of yesterday hammer, today's strength, and snapback short, kicking out a whopping 2. Now, of course, you can see these guys down here that all spat out 1 trade, all lost, and the ones that spit out 2 only hit 50%. Okay. Now, quick note before we move on here, all of the values that you're seeing here on my blotter are based around risking $100 per trade. So that's what these numbers down here are reflecting as well. So if we just kind of cycle through the risk modes here, even if you were operating in conservative mode, 43.37 is the best number you could have hoped for. And of course, this is without slippage or paying commission if you're at the IB environment. Take a little bit more risk, just a little bit worse than a flat on the gross numbers. But if you were just holding and hoping today, boy, you are not rewarded. Basically all due to this 1 trade right here. If you didn't adhere to the stop level, oh, William, what did you do today, right? Now, number 1, look at the volume in this thing. Here we are looking at intraday 15-minute candles. Now, there was volume in it today, but boy, buy signal way up here, stop hit pretty quick, and boom, this thing never recovered. All right. So that's what's resulting in this large drawdown in the aggressive mode. Having said that, there were a few nuggets here. No real conservative or moderate spread. Let's just take a look at the columns here. Here I am sorted by moderate profit, and typically what we look for is a bigger number over here versus conservative. Well, we don't have that here, we don't have that here, and we've got just a little smidge of spread in IP, but we're only talking about 40 some odd dollars. I mean, you buy it right here, Holly gets out right here. If you would have ignored her exit right about here, then you could have enjoyed a little bit of upswing going into the close. But once again, nothing to write home about. And that's basically the only spread that we have here between conservative and moderate that's worth even notating. Not a bad trade, just kind of hemmed and hawed around the entry line all day. Got a little bit of an excursion, but nowhere near halfway down to the stop level. So just kind of a boring winning small trade NIP there. Now, as far as any trade arounds, typically what I look for is a stock that got stopped out. And of course, we look at that in real time. And a lot of the times we'll have a positive number by the time the market closes. So we can see here, we get stopped out of ATNF for that $100 loser here. This was a short play, okay? So the only thing that I could point out here that even resembles a decent trade around in this one is we buy, or excuse me, we get short here, we get stopped out pretty darn quick. As you can see over here, entry time, 8:41:12, and before the next minute was out, this thing jerked back up and triggered the stop, only to come back down and come back up here a couple of times. So the only area of interest that appeals to me is once we see it pop back above this stop area in these two 15-minute candles. Once we got a retracement below that stop area, you can see, boom, all the way back down to the entry level, which typically isn't a very big monetary space here. But on this guy, a little bit different, 1243 down to the 1120 area. So there was still a $1.20 in between entry signal and stop out level. But, you know, I mean, you would have had been all over this one to watch it very closely, waiting for this guy to come back down below this level here in this 15-minute candle. And you would have had to be pretty nimble. And then, of course, if you didn't take the money, it's all the way back up there again. Okay. So once again, not the smoothest trade around, but a trade around nonetheless. And let's see, what else do we have over here? Okay, add-on opportunities. Not really any good ones today. Closest one that I could see was in the fast trade. This was a long, all right. And we're gonna have to go a little bit smaller on the time frame, makes that area of consolidation just a little bit more identifiable. Okay, so now we're looking at fast on the 5-minute intraday. We got a buy signal here, and this one came extremely close to stopping us out, all right. Stop being right down here, 49 and change, all the way down, almost to stop out before it regained some momentum up here. Kind of hugged, ebbed and flowed around that entry line right there. So we could have used this little consolidation as an add-on once we were out of the woods and that stop out did not occur. Or if we were using the traditional orb methodology, which has to be the high of the day, either here on this consolidation level right here for a little add-on about right there, or if we're playing strictly by the rules on the opening range break, this could have also presented us with a decent add-on opportunity. Not a lot up here, 50.40 up to what, about 50.80, so 40 cents on the high of the day break. Let's put a little line right there. Or if you played it from right here, 50.23, still only about 50 cents could have been gleaned if we played this little consolidation area right here. But the bottom line is, it was just kind of a lackluster day for the AI, as the blotter indicates here. A little bit of trade around opportunity, a little bit of add-on opportunity, but just a lackluster, kind of a losing day for the AI, which isn't out of the ordinary. So we'll see what she brings to the table for tomorrow. All right, just checking the questions panel here. Looks like you got it under control, Steve. So moving right along. Okay. All-time high markets. It looks like I got an extra O in there instead of a P. We'll just correct that. Choppy with low volume. Check out the volume levels here and how we closed on the major tracking ETFs. 0.68 relative volume on the SPY. Most of the day, all of these lower time frame volume levels were well below 100. So it's just one of those days, low volume. But as I was stating earlier, things that were working well, not working so well anymore, but things that weren't around now starting to show back up. So there were some beautiful opening range breaks produced for my two favorite tickers here, and we're going to go over those. I'll make sure that I drop these into the chat panel at the end here in case anybody wants to give them a try. But the good news is these windows were kind of less active than they normally are, meaning they were spitting out less symbols. Makes it easier for us to look at each and every play as they come up. So we had some really good alerts from these guys today, and we're going to go over those here in a second. Then at the last here, we're going to revisit the strength alerts because this was the second Monday since the strength alerts started coming out. First issuance of alerts was last Monday. We're going to go over those, and then we're going to talk about the ones that were issued today and how they've started the day or the week as well. So let's go ahead and take a look at some of these nice little intraday setups. And hopefully you guys can't hear the leaf blower outside, but if you can, I apologize. Hopefully my noise canceling mic is doing its job there. Okay, so as far as opening range breaks go, some of the more simple patterns that I like to play, and we've got them to the upside and to the downside. And typically what I'm doing here with these two windows is just watching what comes through here and then seeing if the timing is in play. So I guess let's go over the long plays first. First on deck, CELC. Okay, so here we are looking at the 5-minute candles, which I think is fine for these guys. We had the opening candle right here. We got a little high being put in about 20 minutes into the open. And we're going to come down here and test these lows again. And then right about 45 minutes into the open, we get the alert right here, CELC, breaking highs. And I believe at that time, my new high or low was telling me how much room might be in this thing if it does go, $1.53. Looked attractive, okay? And you can see exactly what CELC did for the remainder of the day. Now I'm wondering why all my notations have disappeared here. Okay, so there was the 5-minute version. Here we can see 1, 2, 3, still looks, I had to shrink some of those other ones up, but this one still looks really great on the 15-minute. There you can see the risk level, meaning as soon as we buy it going through here, nice and clean, popping that new all-time high out of a little consolidation period. And I'll probably just have this, I guess my 5-minute chart kind of squish that up. But this is the opening candle right here, okay? So we see CELC popping new highs right here. Here's our risk level right here at the bottom of the prior 15-minute candle. So forgot to bump this one up a little bit, made a little bit of a run going into the close. So we've got a nice clean setup, what I like to call A+ setup on the intraday opening range break. We got a low risk area that we could probably pop into that reward area 3-4 times there, okay? And that's typically what we're looking for is something, on the R factor, at least 1, 2 is better, 3 or 4 is even better. So a real clean break on CELC and finish the day very strong there. Yeah, Mike, I don't have one of those. I've got one of those little toy guns that you pack with salt, and then you can shoot the flies, right? Of course, we just had fly season here. Hopefully it's over. All right, number 2 on the opening range breakout circuit here for today, MUDs, okay? It's funny because there was another ticker, I can't remember if it was Friday, today, land was coming through. I'm like, there seems to be a theme here, MUDs, land. 2 different stocks though, obviously, 2 different sectors. But this one is beautiful as well. We got the opening candle here, putting in the high, put in our low down here. Then we just come up here and make this nice clean break right about the 1142 level. And of course, the risk on this one, if we just cinch this one up to that low of the prior 15-minute candle, nice small risk area. And this one took, maybe a little bit longer than the CELC to get going here, but just kind of hemmed and hawed right about flat. And then finally got this nice little lift. Mental note, notice the 10 period, the green line, controlling this thing all day until we get towards the end of the market here. So plenty of time to take some off for a very nice risk to reward ratio. This one giving back a little bit into the close, but not that much. If we kind of look back at CELC, we're going to notice the same thing in play with that 10 period fast line there. And Vero, to your question, we've got the test drive coming up in May. So in May, that'll be your chance to get a 2-week access to the product for a very low price. So if you can wait that long, test drive coming up in May. All right, number 3 on the clean opening range breakout list today, LHDX. Okay, and I just kind of want to recycle these guys. These nice clean setups here, they've been very hard to find. Usually you're going to find things that take big runs on the open, so takes all the potentiality out of that trade the more it goes up on the open. But we're starting to see, I think it's just due to the nature of the market, some that are setting up a lot nicer and not having big energy expenditures before these crucial plays or these crucial areas get traded through. So LHDX, this one taking a little bit longer than the others, but this alert coming through, actually, I had to put it back down because that was the pop from the high right there. This one took 1, 2, 3, 4, 5, 6, about an hour and a half from the time we made the entry before it got its lift, but that's fine because it just kind of towed the line here, maybe underwater by about, let's see, 960, about a 20-cent wiggle here, but not getting down to our risk level. All right. So nice trade, nice low risk area. Once again, this is the entry candle. So we're going to use the prior low of the prior, or the low of the prior 15-minute candle. Would have kept us in nice and clean. Here's the 10 period giving us some reassurance as well. So very small risk area. And once again, a reward area that you could probably slide this thing into 4 or 5 times here. So this one basically going from 960, capitulating up at 1217 before giving some back in the latter half of the day there. All right, Jason, I see your question there about interactive. If I have data through IBR, can the volume display real-time buys? I'm not really sure what you mean by that question there, Jason. And Elaine, what I'm talking about here is this candle right here. All right, this candle right here was the entry candle. Okay, these are 15-minute candles. So what I would do is use the low of the prior 15-minute candle as my risk area. If we look back here at MUDs again, oops, yeah, same thing. So entry candle would be right here on these opening range breaks because that's what it's doing. We put in the high, we put in the low, this becomes the opening range. Once that range gets broken, either to the upside or the downside, that's what we call a opening range break, or just an orb for short. And once again, here's the entry candle here, looking at the low of the prior 15-minute candle as my risk tolerance. And I'll just go back and we'll look at the CELC one more time as well, just to illustrate. Okay, so once again, entry candle here, low of the prior 15-minute candle as a risk metric. Okay, so hopefully that helps clear the air there. Vero, so I will give you a peek into the scanners here because the main trigger that we're using here is a daily high, okay, for the longs, and a daily low for the shorts. So if let me clear my screen here and just, let's use MUD for the example again here, okay? Because here's the deal with these guys. If a stock sets its high and then retraces and sets a low, then the high and the low have been established. So we're waiting for a break either above the prior high or below the prior low, okay? So the metric that I'm using here in this window to tell me about that is, see, an opening range break cannot occur until a new high has been met, okay? Or, right here, new high, we can quickly see, this is a nice tight pattern. It's breaking its high. That's why I'm using new high as the metric. And we're going to use new low for the downside or the bearish or short alerts, okay? Now the filter set that I'm using here is pretty simple and straightforward. Little min-max price action, capping the float. And this guy right here is really what gives it the zest, okay? I'm wanting stocks that are doing high volume because the theory is if I have accompanying high volume, the more likely it is for the stock to move in the direction that I hope it's going to. Okay, so these are relatively very simple tickers, and you're going to get a lot of symbols coming through them, but it's all about the timing. Is the pattern conducive? Is the risk conducive? Okay. All right, so that kind of wraps up the long side for the opening range breaks today. But, you know, as I was commenting on earlier from my compare count window, there's going to be some good longs, there's going to be some good shorts. So now let's take a look at some of the good short opening range breaks that were present today. Very nice one in PBTS today, okay? Now, this guy gapped up pretty good, but look, sellers are in control in the first 45 minutes. And then 1, 2, 3, 4, we get a nice little hour of really tight consolidation down here before, guess what? That opening range, you know, obviously the opening range in this case, you know, the high is way up here, but all we're concerned about with here is the low, okay? Number one, is it behaving down here? And when I see this type of setup, clearly sellers were in charge in the opening hour here, 45 minutes. Now they're taking a break. Buyers and sellers become equal. And if this guy trades through here with some volume, look how low my risk is. If I'm using the prior 15-minute candle, we got a very small risk area here. Once this candle penetrates the low of the day, all we have to do is put that short on. Never even acts like it's going to throw a wiggle at us. And we just get this nice, slow, controlled, orderly march down. So we got a real tiny risk area right here. And we've got a nice and big, fat, juicy reward area on a nice intraday short. This one was also beautiful. Okay. You can't really see the area here. This is one of the ones I'm going to have to back out and go a little bit on the 5-minute. But of course, I will tell you, in the first 30 minutes to an hour, I'm watching 5-minute candles because it gives me some things to make a pattern out of. You know, you got to have candles to illustrate something. And this is very similar to what we just saw in PBTS. Nice big gap up. Sellers take control in the first 10 minutes. Then we get this nice area of consolidation, clearly definable. So as soon as this level right here is broken, you can see what happened. So playing the same game here, looking at 5-minute candles, if we count up 3 of them, 1, 2, 3, you can see the highest point would be the 15 minutes before, just like the others, except we're looking at 5 minutes versus 15-minute candles. And this one is the same. Never even acted like it was going to stop us out, and we get this nice controlled downturn here. Now, where you get out is another story, but plenty of opportunity to book some profit in this one. Heck, even if you held it to the close, you still made something, but you really had some nice opportunity to lock in some very decent gains from a percentage standpoint, being short up here from this 22.68 level, getting all the way back down to about 22 there. So a nice percentage move on Cade as well, which, by the way, as Steve was talking about earlier, is a bank. All right. And lastly, barbecue. This was a fun trade today. I got a little piece of this one. Not because, well, it did come through my ticker, of course, came through right here and right here. I got it a little bit late, but I've been waiting for this one because look at the daily. All right. This thing busted out here not too long ago, and I saw it. I saw it busting out, you know, gapping up and busting out on this day, and I was just like kind of stared at it. I'm like, yeah, I don't know. These breakouts haven't been going too well here lately. And of course, as we've been talking about over and over, it's kind of like a coin flip on some of these breaks. All right. Some will go, some will not. Clearly, this is one that went. I didn't get any of this on the upside, but I mean, 1, 2, 3, 4, 5, 6, 7, 8, 8 consecutive days up before today rolled around. So I saw it once again coming through this window right here, which is my all-time high ticker, and I'm just like, oh goodness, another update for barbecue. However, not too long after that, I see it come through here, right? It's breaking this level right here, and I'm thinking to myself, you know what? I'm going to take a little bit of this one. You know, I'm going to risk up to here. Or, I was just eyeballing the wick up here. I'm like, well, if, today's as good as any to take a short on this one. And as you can see right here, a little bit late, and this little S right here indicates where I took my short in brokerage plus. So probably left, let's see, 14, 17, I gave up about 30 cents on the entry, but it paid off pretty good. All right. You can see my buy down here. Whenever you do anything in brokerage plus, it's going to show you sell, buy down here. And of course, I had my bids down already in there at 12. I'm thinking to myself, hey, if I can get a couple of point scalp on this one on intraday basis, I'll be happy. Of course, I think I got up and got busy doing something. Come back, I'd been filled, and the thing was sitting down here at 1160, and I'm thinking to myself, left some money on the table. But as you can see here, didn't take too long for this thing to rocket back up. Anyway, long story short, it was a nice trade. I'm glad I closed it there because you can see buyers tried to take control again. And had I sat in this one for the day, I'd be approaching flat right now. So that is the theme right now, is follow through is kind of hard right now. Some are going to follow through on the long side, some are going to follow through on the downside, some are going to be in the money for a while. So it just all boils down to risk management. You can't go wrong with taking some on the initial pop, setting that stop on the second half if you want to take a little bit more risk to a break even or whatever. The lesson here is just to be nimble right now in these markets. And unless you see something very juicy on the daily or the weekly that tells you there might be some additional room left in this stock, be nimble. Okay, ladies and gents, let me just do a little time check here because I did want to save some time for the price alerts here. And we have just enough time to do that. So just to refresh everybody's memory, we just launched a new little subservice that we're calling price alerts or strength alerts, excuse me, which are going to be issued each and every Monday before the open, kind of in the same spirit as the TI Trade of the Week. But instead of one, you're going to get 5 that should be technically strong. So last week was the first week that they were issued. So let's just take a peek at the price action on those plays that were issued last week, and then we'll talk about the ones that came out this week. Now, what I'm going to do here before I forget is I'm going to go ahead and drop the links in for the alerts that I talked about today and the strength alerts, the URL where you can go click and make sure you're on the list so that you can get the strength alerts. And on that topic, if you're a current subscriber, you'll see over here, we do have the strength alerts channel now. So you'll be able to see the plays each and every Monday in that respective top list. If you're not a subscriber, you can sign up just for the strength alerts for 17 bucks a month. You'll get the newsletter as well. And if you're a current subscriber and you want the newsletter as well, sorry, you're still gonna have to pay up to 17 bucks. If you're a current subscriber, you'll get the symbols. But if you want the added newsletter, that's where the 17 bucks comes in if you're already a subscriber. So that URL, Strength Alerts, will get you to the sign up page and you can get signed up if you'd like to there. Now, let's talk about the symbols from last week. And so there's been a lot of talk about, well, how are we going to use the strength alerts? Okay. And that's going to be a little bit different for each and every person based on your account size, your risk tolerance, things of that nature. We're going to deliver the alerts to you, but it's kind of like Holly, right? You look at the alerts as they come out and you size them up and you go, yeah, I feel comfortable buying this one, or I feel comfortable buying this one, or you know what, I don't really like this one, so I might wait, okay? So yesterday, the last Monday was the 5th. So let's look at the first one here, ANGO, all right? And the 5th, let me just get my marker here. Okay, the 5th was this little candle right here. All right, so let me just point to that guy right there. I can't draw with this stuff, so bear with me. Okay, so this was the candle for the 5th. All right, whether you bought it down here on the wick or whether you bought it at the close, you can see that you had plenty of time to make an exit
You know, I made
before.
a feature request to Brad over the weekend to do exactly what you're doing, so that
Mhm.
when you click into the channel, there'll be buy
Yep.
tags on those candles all waiting for you.
And everybody just needs to keep in mind this is all brand new, and we're seeing these plays for the first time too, and trying to figure out in our brains, what's the best way to handle these alerts, right? What's the best way to handle risk? And as Steve said, what's the best way to track these? Okay. So A and GO, not bad, still staying in this little upper quadrant, plenty of time to take some money off the table. But then, here we are coming back down to the flat area. Now, what's it going to do from this point on, right? Could we bounce here and pop back up? Sure, all right. It all depends on your cost basis here and how much wiggle you're willing to give these things, okay? So that's just kind of a peek at one of the ones from last week. The next one on the docket here, HTGC, okay? And I do believe this is going to be the 5th as well, all right? So this little guy right here, by the way, Hercules Capital, one of the biggest venture capital holding companies out there that likes to fuel young companies, all right? I'm just going to kind of shrink the chart up here. Let's take a look at the weekly. I just wanted to do that to, let everybody take a peek here. If we're not, I mean, we're just knocking on the doors of all-time highs here, okay? So this one, let's see, where'd the 5th go again? Oops, sorry. I guess it helped to flip it back over to daily. But this one's been good, okay? Um, the 5th right here, I'm still in this one. I don't know why an S is popping up there. But this is one that I'm deciding to hold from last week because, well, it looks like it might have some more potential in it. But that's just me, right? Looks good, so I'm not going to close it out. I'm going to hold it. ENTG, not another bad one. The 5th right here, so plenty of time to get a good entry in that guy. I was in the money. I think I'm approaching flat right now on this one. But check out what's happening. It's just kind of cycling back down to the lower end here. About to have a date with the 10 period. If it came close to it today, we'll see what happens moving forward. OHI. Get rid of that other arrow there. The 5th right here. Okay, Omega Healthcare. All right, off to a bang up start, but now giving some back. A little close below the 10 period, a little wick down to the 50 here. Might have some retrace in it, okay? Was in the money nicely, and now not so much. And the last one to round out the 5, MPC, okay? Now this one is a great example, and keep in mind, everybody, this is just how I've been perceiving things. So what we're gonna do here, we're gonna go back to 15 minutes. We're gonna look at the 5th. Let's see. Just wanna make it to where everybody can actually see it. And I think here we are. Nope, here we are. Okay. Here we are on the 5th. Squish it up a little bit more. Okay, so this is the 5th in 15-minute candles, okay? When I looked at MPC on the 5th, it was right here, okay? Now, based on what we just covered in the intraday opening range breaks, you can imagine what went through my head when I saw MPC coming through here. And then I also saw it coming, here we are after this big green day here, heading down. I'm thinking to myself, number one, it's an oil stock. Now, some of you might love or hate oil stocks, but the oil stocks seem to, you either love them or hate them, right? So when I saw this one, I'm thinking to myself, I'm gonna buy it just to see what happens, since it was my first foray into the strength alerts, but my trader brain was fighting me the whole time, okay? And not saying I told you so, but it is the largest loser of the bunch thus far. Okay. So herein lies the trick moving forward. You don't have to take all of them. You can pick and choose. Or if you want to play the odds and go, you know what, I have no idea which one's going to end up being the big winner and which one's going to end up being the big loser. This just happened to be the setup at the time where the stock came to my attention on that day for entries, okay? And if I would have listened to my trader brain, I could have improved the performance on that little basket of holdings, which leads me to the next point. Even though I took every trade, including MPC, which was the biggest loser from last week, even with MPC on the blotter last week, the interesting observation was holding all of those stocks, allocating an equal amount of capital between all 5 of them, I still had 2 opportunities to exit that basket of stocks up about 1.5%, okay? Not 1, but 2, okay? So that's good information for me moving forward because, compounding is a powerful thing on a weekly basis. And even though 1.5% doesn't sound like a lot, you know, if you can do that even on a monthly basis, um, that is a very good compounding effect. So unless I see anything like this in the future, I'm going to continue just to pile into all 5 of them, okay? Which leads me to the basket of stocks that was delivered today. And even more humor as I learn to interact with these things. And what do I mean by humor? Okay, well, even between us trader guys, there was a little confusion as to, okay, you know, Michael Noss has done a very excellent job at putting this this program together. But then we were talking about, okay, we've been tracking as far as our tracking of these things moving forward and the back testing, what are we using? And I was under the assumption that it was, okay, you get into the things at the close on Monday, and then you get out of them at the following Monday at the close while simultaneously making your new entries at the close. And I thought, well, okay. So for the opening flurry this morning, I was under the assumption, okay, Jamie, you need to wait until the close to make your entries. But that is not the case, okay? Just like there is no case for stop losses when you want to enter, okay? You're going to get the plays, and then it's up to you to make your entries, assign your risk, so forth and so on. And everything I'm just giving you my insights and my experience thus far. So this morning, after I saw my compare counts looking very, well, 50-50-ish, on any other day, my trader brain would say, on any longs you want to do today, wait for a pullback, okay? Wait for a pullback. And, but I was under the assumption I was going to make entries at the close in the last 15 minutes or so. But not necessarily the case. I started looking at these things. I'm like, well, I personally, I just don't want to wait till the close. Okay. I think I can get some better entries, paying attention to my favorite metrics and just looking at the individual charts of the stocks and so forth and so on. So here are the entries that I made today. These were the stocks that were issued today. All right. We got Dan. I'm sure Dan got a kick out of that one. But as you can see here, had I waited, even the first 15, 30, 45 minutes to an hour, I could have potentially had an entry in this area, okay? But I didn't pull it up till later, and I'm thinking to myself, okay, thus far, yes, I would have much rather have had a fill in the first 45 minutes to an hour at this level, but stock looks strong, adhering to the 10 period. Here's where I got my buy-in, okay? And it's still up nicely, but I could have had a much better entry. So this is the way I'll do it moving forward based on my compare counts and what I think the market's going to do. If they're strong, I'll probably go in the first 15 minutes. If my compare counts are weak, I'll probably wait for pullbacks. So just the way that my brain operates. Now this next one, SIG, not bad on this one. Went up, pretty nicely. Took a little pullback here, and I'm thinking to myself, well, doesn't look so bad to go ahead and make an entry on SIG here. And you can see all my entry times. These are Central Standard Time. So this was well over 3 hours in, well over 3 hours in. All of these were 3 hours in. So, the cool part is they're all in the money. They just could have been in the money a little bit better had I picked my entries better and not running under the assumption that I should wait till the close. TPX, okay, nice little swoon down. So see, pullback would have been the best way to grab this entry today. Even if I would have waited an hour, could have had it somewhere at 38.73. Didn't take that much worse of a price, and at 38.93, as you can see from the Brokerage Plus buy tag up there. JCI, yeah, could have had a little bit better entry in the 61, 62 area, or actually low 61s. I'm in it 61.90. And lastly, I think this is probably my chasiest, but as you can see here, stock is still strong. I'm in it from 59.41, but boy, that 1, 2, 3, that opening 30, 45 hour period there could have got me in about a point earlier on Foot Locker. Okay, so off to a good start. We'll see how the rest of the week progresses. But these are the new strength picks and off to a good start. So just kind of wanted to show you guys a little bit what went through my brain as far as trying to figure out when you should make entries on these stocks. Yeah, Stan, to your question there, what does the newsletter do? Exactly what Steve is typed out in the response panel there. It's just Michael's going to post the chart, give it a little bit of what he thinks about the stock, so forth and so on. And the entry on SIG, well, that's a good question, Jeff. We're going to give you the picks every Monday. When you make the entries is up to you. What went through my mind? Why did I buy SIG right here? Because I'm thinking to myself, when I saw this in real time, I'm like, okay, stock is strong. At that point in time, we were sitting at 64, 69, and the low was right down here on this wick. Okay. So I was just thinking to myself, what I'm doing right now is I'm taking what I think I should allocate, and I'm only doing half right now. Okay. Because my thought was, you know what, I'm going to go ahead and take some here. All right. After this little pullback here. Low of the day is down to this wick right here. The wick tells me that the sellers tried to take control but couldn't do it. That's why the candle closed up here. But the bottom line is making my entries today on half lots with the assumption that if we do get a little bit of weakness, my thinking was, you know what, I'm going to do a half lot here, and if I get a pullback to here, maybe I'll do some more. Okay. But if it keeps on going strong, I'll probably just sit with what I got, because this is only the second week that I'm doing this, so there's no point in throwing gobs of capital at it until I feel confident in my process, right? So, just a simple bet that it wasn't going to retrace lows there. Not a lot of rocket science going into that one, Jeff. So all of these stocks are technically strong. If we just kind of circle through the sectors here, we got Dan in manufacturing. We got SIG in retail for jewelry. We got some mattresses, right? JCI is in something completely different, warm air heating and air conditioning equipment, Johnson Controls, and then we've got another retail stock in the form of Foot Locker. And we know that all of these retails have been strong. Don't have any oil stocks sliding through this time, or any pharmaceuticals. And once again, not saying that oil stocks aren't good trading vehicles or pharmaceuticals aren't good trading vehicles or healthcare. They just seem to be the more volatile ones. Of course, that pendulum swings both ways. Get good uplifts, or you can get quicker drawdowns. But we don't have any pharmaceuticals or any oil stocks in this batch this week. All right, I know we're bumping up against the top of the hour here, so want to thank everybody for popping in and hearing what we have to say. Always appreciated. Scott, if you're ready to let everybody know how they can save a little bit of cash on an upgrade or a new subscription, I guess it's that time.
Yeah, sure. Thank you. Couple things before that. We do have a new ebook done by our um, director of software development. It's got his favorite strategy indicators to use. Go ahead and grab it. It's free. trade-ideas.com/strategy. Just go ahead and plug in your email address, and it'll get you get the download. So do check that out. We've also got a podcast, and we've got a new episode up. David Afariat did an interview. He's one of our managing partners. So go ahead and subscribe to Trade Ideas Podcast in your favorite podcast app. Get that new episode and check out some earlier interviews from earlier this year. We've also got a code. We're using code opportunity this month. Saves you 15% off your first month or year of Trade Ideas or an upgrade. So if you want to start a subscription or get the new goodies, go ahead and do that. You can email us info@trade-ideas.com for help. That's the best place to send your help questions. It goes to our help desk. You can find Steve on Twitter at TISDG, find Jamie at QuantBot, and Trade Ideas Pro is the place to find us on Facebook. The recording of this will be available later on tonight or tomorrow, so stay tuned for that. Thanks, everyone.
Thanks,
Thanks, Jamie.
everybody. We'll see you tomorrow.